Happy weekend, everybody. It is Friday, April 12th, 2024, here at PreciseAlgorithmTrading.com. And, the markets the volatility is kicked up. So let's get into it and start here with the automated trading systems because while the volatility is picked up, volatility, um, this is these are our automated systems, so they literally trade on their own. But we had more winners than losers today because, again, I think it's because volatility picked up. And these systems have been failing because volatility has been so low. And I shouldn't say failing, but they've been pulling back. And now they're really picking up steam. So this is the Russell futures, and it only had one trade today, and it was a loss. But between the Dow, with even though that looks small, it's not in. I mean, it's still a nice trade or a nice couple wins there, and the Nasdaq really has picked back up here. This probably still looks small compared to all that, and it is, but that's what you need. You need this thing to start picking up steam so it can get back up here to the all-time highs. And this is our equity, by the way. So we had this trade the other day, just yesterday, I guess. Boy, it's been a long couple days. And then we had these trades today. So some nice trades there. And again, these are intraday plays, so they're or intraday systems. So they trade that many times in a day, like that. That's what 1, 2, 3, 4, and sometimes even more than that. There's 4, 9. I mean, it was losses, but still, it's like 6 trades or something like that. And this thing it trades both directions if the market's going higher or the market's going lower. And so it's kind of like the other stuff that we do, and it's just a little bit on steroids. So that is a trade-off to what's going on in the other markets, which this is the S&P 500. And I went ahead and threw this on here. Maybe I'll detach this real quick and we'll come back to this. So the S&P, this is what we're used to looking at when I'm doing these nightly reviews. The S&P went down hard today, and that's actually after market there. So let's look at the SPX. I'm just gonna have to move this around a little bit. And so the SPX went down 1.46% today, which is really what the other one showed. So that's interesting. Or 1.8. I'm sorry, 1.46. So that's really in line with the futures. I think that's just an anomaly. But you can see we've been in, as far as the SAR dots go, they've been pink, and now it looks to me guess we haven't stopped out the weekly dots to the downside yet. So that's I think they will. I think they'll flip come Monday. And when they do, that's probably actually, if these things work a little counterintuitive, like when this flipped here, it actually had some bullishness that came in, and then some bearishness, and then we've been sort of back and forth, but selling off the whole way. So that's the S&P. $ DJI. There's your Dow. The Dow's been really falling ever since it didn't hit the 40,000 mark. It was getting there, but it's sold back off down under 38,000. And actually, this is all fine. It's it's probably healthy for the market to take a breath, because it's been nothing but pushing higher for all this time. That is 1, 2, 3, 4, 5 months. We're finally getting some sell-off and some new opportunity for basically new buying when the time comes. And this thing, from a weekly standpoint, we'll flip it up here. The trend line, which is the 30-period moving average, and in this case it's on the week, is still green and going higher. So the trend is still up. So basically, we're still looking really for eventually for the longer term, or the short term. This red needs to turn around and go higher if we want to buy. This has been obviously a nice push for the bears. If you're taking short positions, this thing worked. And we can start to see when things start to heal by over here on the hourly chart. This is a proxy for the daily, and it turned red here, and this is the shortest term 30-minute or 30-period moving average. When it starts to turn green again, we can at least maybe get a move, probably get a move that goes back up into the territory of the red line here. And I mean, the way these things work is you'll get that back and forth, and then you'll start to see things start to roll back around. And it's going to be when everybody's not watching again. After everybody's gnashing of teeth and worrying about the markets, and they're never going to go back up again. And I actually don't think this thing, I think this thing's going to be pretty short-lived before we get a bounce, which is only going to make it back up to the middle. The mean. It'll be a mean reversion play, and that's really typical and totally normal. And you can see our stochastic down here is almost bottomed out. So that's why we even have these on here. It's to be able to see extremes in the markets. And really, these SAR dots are showing you when those types of trends flip too. This thing has been on a tear to the upside, and now it's really on a quick tear to the downside. Markets move 3 times as fast. I've heard that statistic. I think it's just it's not exactly right. Markets move 3 times as fast to the downside as they do to the upside. So one of the sayings in the market is the market takes a stairs up and the window down. And that's what we're seeing here. And now we're under the 2 ATR. We're probably under 3 ATR. And the snapback rally is going to be what we're going to be expecting. So I'll take this off of here. Actually, let's keep going. Let's look at the Russell. So the Russell's down 1.93% today, and at the 2 ATR, and also bottoming out down here on the stochastic. So a bounce from this zone in any one of these moments is going to happen, and the thing's set up for that at this point. And again, I'm really expecting it to come back up and roll over. These new pink dots, or magenta dots, whatever they are, they just got started. So rolling back up into them is actually going to be a selling opportunity if you go short the markets. If not, it's just park, sit in the side, and stay in cash. COMPQ. I'm not sure that's what it is anymore. Yep, it's not. Alright. COMP. Sold off 1.62%. This is the NASDAQ. And IYT, which is transport, sold off 1.46%. So, everything just sells off on days like this. And the reason I put this up here, this is a study that I've got built for being able to see a number of statistics. So IYT in this case, literally trading the way that I've showed trading off of this thing with the parabolic SAR dots and the green to red 30 period moving average. Actually, I don't even use the multiple time frames for these statistics. That actually just makes it better. But and I don't actually know if I got my profit factor exactly right. That's what it's saying is for every dollar that you make $1.09. But it's a 65% win rate as far as win to loss ratio. And so out of 60 trades, you have a win count of 39 and a loss of 21. That does all the math for you. So, and then if you apply options to it, then it changes this metric, but it doesn't change the fact that it wins 65% of the time. If we flip this thing up to the S&P 500 straight out, it wins 76.67% of the time. And if we go on individual stocks, let's look at Apple, which, I'm not even looking at Apple for a long play right now, although it's interesting that it is rallying. Apple's at 65.45% win ratio for this strategy, and I build these strategies with these metrics in mind. And when we have, say, 20 positions on, I'm using this math and to my advantage. That's the whole point of this, is keeping the math, keeping the odds in your favor. So I'm going to get off of that for now because I think that's enough. It works with almost every instrument. I won't say it works all the time with every instrument. So the win-loss ratio on oil is 50%, and it is a volatile beast. But that means 50-50. 50% of the time you win, and at the end of the day, it makes money. So now in this case, it's for every dollar you make, that you risk, you bring back 99 cents. So it's not as good as a regular stock. And by the way, these statistics are only showing here for bullish positions. I can build the same thing for bearish, but I don't really need to do all that. So I don't look at this stuff except just to verify systems, and then I just trade the systems instead. So there you go. That is, so the markets it's been a little sour here lately, and that's okay. They will come back. Let's look at TLT. It's still going lower. By the way, this is a strategy in Thinkorswim, and if I right click on my strategy, I can actually see a report, in case you've never seen this before, that actually goes through each trade, does the total win-loss ratio, total profit and loss, and again, this is TLT, so it's bonds. It's not exactly like a stock, but at the end of the day, it works. It makes money. And a little trick is like, Microsoft. Stocks like Microsoft, Facebook, Amazon, and Google, and Netflix will have typically better win-loss ratios because they're the ones that the market has been pushing around and really rioting all this time. So TSLA, Tesla. Haven't looked at it in a bit, but Tesla, it's got a win-loss ratio of 53.45, or yeah, 53.45%. So I hope that gives you some understanding that when I'm doing this stuff, it's not just, it's based in math, and that's what I've said all along. So just wanted to show you some of that. All right, that's enough of that. We're going to flip over to the bullish percent indexes, and here's the big bullish percent index for the NYSE, and it moved down today, and it's been volatile lately, or the markets have, but this really hasn't. It's just sitting right here, just like it has for a while. It's at 49.15, which is just underneath this line right here. It has to go down 1, 2, 3 boxes to get a reversal. And I don't think that's going to happen in this push. So that the market can do anything it wants anytime. I have zero control of that. All I can do is control myself and what I do with it, with the information. But I don't think, based on the information I was just looking at, it'd be a big move for it to, it'd have to be a flash crash or something. And we haven't had one of those in a long time, so I hope I didn't just jinx us. Bullish. Now, something else, the way we use stops for every trade, even if there is a flash crash, you're going to be out before things move so violently, because it'll hit your stop. And let's see. So here's the BPNYA, bullish percent index of the industrials. Went down another O today, down 5.56%. The small NYA flipped over to a column of O's, down 2.41%. The transports didn't move. The NASDAQ down 2.93%. The S&P 500 tacked on 2 new O's, and we are now officially on a point and figure sell signal, minus 4.46%. This is, for what it's worth, what it would take to have a flash crash or a big move. But again, we're up against some major support levels, and there's an awful lot of internal type metrics that are just set up. This thing's gone, I'm not going to say too far too fast, but it's gone quite a bit of distance when I'm talking about the Dow Jones. It's gone that far in that amount of time, and it's getting up against parameters like this, and even the RSI 2 up here. In a lot of cases, it's under 2. Not this one, but in a lot of cases, and it's those types of things, when they all start to line up, basically you get to a point where the market's going to bounce because too many people are getting too bearish, and markets are counterintuitive. They go against where the masses are. So what was I on there? The S&P 500, the S&P 100 tacked on a new O and went down 4.69%, and the NASDAQ 100 minus 2.04%, but we are sitting right in this zone that sure looks like an area to bounce from, unless it breaks through like it sometimes does. Broke through here, but then even when it breaks through, and it broke through there, but it immediately moved higher and moved higher. So we could be in for a little breakdown like that, and then be wild if we got to move just right back the other way, a big slingshot move. And that's my end of the week review. So I think Monday we're going to have some initial weakness out of the gate, and it could even last through the day. But again, I'm going to be looking for basically some capitulation some basically tails on the maybe the candles, some hammers, things like that, or some long tail dojis or something like that to the downside. That when showing us inside of the price action that we're in for a potential rally and a bounce back to the mean. So that's what I got to say. Hope everybody has a great weekend. So we will talk to you again next week.